Imagine owning a tiny piece of Apple, Tesla, or even Coca-Cola. Every time these companies grow, so does your money. That's the power of the stock market. But here's the thing, most beginners lose money because they don't understand how it works. In this video, I'll break down the stock market basics, what it is, how it works, and how you can start investing. So to begin with, what is the stock market? The stock market is simply a marketplace where people buy and sell shares of companies. A share represents partial ownership of a company. Think of a company as a giant pizza. If it's cut into 1,000 slices and you own 10, you now own 1% of that pizza. If that pizza shop grows and becomes the best in your city, your slices are now worth more. That's what happens with companies listed on the stock exchange. There are two big stock exchanges most people hear about: the New York Stock Exchange and the Nasdaq.
What is the Nasdaq?
But every
The
country
Nasdaq is-
has its own, even smaller ones like the Johannesburg Stock Exchange in South Africa or the Malawi Stock Exchange in Malawi, Africa. But how do you make money on the stock exchange? So there are two main ways investors make money in stocks. First way is the capital gains. This is buying low and selling high. If you buy Tesla stock at $100 and sell it at $200, that's a $100 profit per share. The second way people make money on the stock market is dividends. Some companies share part of their profits with shareholders in the form of cash payments. Think of it like rent being paid to you just for owning the stock. And here's a fun fact. Warren Buffett made billions, not just from stock prices rising, but also from steady dividends from companies like Coca-Cola. Why do stock prices go up and down? So stock prices change every second because of supply and demand. If more people want to buy a stock, the price goes up. If more people want to sell, the price goes down. But what drives that demand? News, company earnings, the economy, even global events. One tweet from Elon Musk can move billions of dollars in seconds. That's the market's emotional side, fear and greed. So what are some of the types of stocks? The different categories of stocks. First one is blue chip stocks. These are used by large, stable companies like Microsoft or Johnson & Johnson. Lower risk and steady returns. There are also growth stocks. These are used by companies like Tesla or Amazon in their earlier days. They reinvest the profits to expand quickly. There's a higher risk associated with this and a higher reward. Third one is value stocks. These are stocks that are undervalued compared to their true worth. Investors like Warren Buffett love this. Penny stocks. These are very cheap and used by small companies. There's a higher risk associated with this, and often they're scams. Beginners should avoid this at all costs. These are some of the most common beginner mistakes. Most beginners lose money because they try to get rich quick, panic sell during market drops, don't research the companies they're investing in, and they put all their money into one stock instead of diversifying. You remember, the stock market isn't a lottery, it's a long-term worth building tool. If you have read The Millionaire Fast Lane, you realize that the stock market is one of the slow lane ways to get rich. How to start investing? Here's how you can start. Firstly, you can open a brokerage account. Apps like Robinhood, Fidelity, or your local stock exchange platforms. Number two is to start with index funds or ETFs. So these are like bundles of stocks, like the S&P 500. So the S&P 500 is a stock that holds 500 of the largest US companies. It's safer than just picking one stock. Number three is to invest consistently, even small amounts. Let's say $10 a week invested over years can turn into thousands thanks to compound interest. So to wrap it up, the stock market is one of the most powerful wealth building tools in history, but it only works if you have patience, consistency, and the right knowledge. Don't chase hype, don't panic, play the long game.